Well, a lot's happened since the last time we caught up here. We've seen this market rotation continue where investors are exiting a lot of these high flying artificial intelligence names and moving into more value oriented areas of the market. We've also been through earnings season. It was a really strong earnings season. And a number of other events that really helped to shape the market in returns over the last couple of weeks. But what I want to talk about this week is the latest news out of Washington. So last Friday, we heard from the Supreme Court. They ruled against President Trump and his use of IEPA, which is the International Emergency Economic Powers Act, and his use of IEPA in justifying the use of many of his tariffs that were put in place last year. So he responded very quickly after that ruling on Friday with a 10% broad tariff against all trading partners. That was increased to 15% on Saturday. So here we are, 15% tariff rates are in place. This is going to help to keep a fair amount of the revenues in place, at least for now. He did this under Section 122, which really gives him the ability to put tariffs in place without any investigation. This is really the broad powers and discretion that the president has. These tariffs can be between 10 and 15%, so we took it up to the max of 15%, and they can last up to 150 days or 5 months. So that's what he's done. Now, the impact on trading partners is kind of mixed. If you look at China or India, they're actually going to get a slightly lower tariff rate than they otherwise had in place. In the case of the UK, they had actually negotiated a 10% tariff rate, and so their tariff rate is actually going to go up for now. So there are winners and losers. Now, this actually isn't the first time that we've seen a major Supreme Court ruling, although this is a big one. You may recall back in 2023, so a few years ago, the Supreme Court ruled against President Biden when he tried to forgive about $400 billion in student loans. Now, he ultimately used other means and authorities granted to him by Congress to forgive close to $200 billion. So this is not the first time. It shows that the separation of powers is working. Right now, we're just in this state of uncertainty, so really back in it, where we're going to wait and see what happens in the months to come. With Section 122 now in place, what the president is going to do is begin these investigations that are afforded to him by Congress so he can put tariffs in place for the longer term and actually put tariffs in place that go higher than 15%. So we're going to wait and see what happens here. The Section 122, because it lasts 5 months, it will take us into July. And before we know it, we're going to be preparing for the midterm election. We know that affordability remains a concern among U.S. households. And so tariffs are really right back into the center of things. And so we're going to wait and see how this all shakes out. How are we responding from an investment standpoint? Really, there's no response right now. We are all waiting for more data. We didn't respond last year when the news broke on Liberation Day in early April. It turned out to be a very good call not to have a knee-jerk response. And just because there are headlines and they can move markets on a day-to-day basis doesn't mean that you need to react in terms of portfolio trades. And so we're going to wait. We're going to trade on data as we always have. Right now, the earnings picture is still good. The economic outlook is still good. And so it's important not to trade just on headlines, even if we see this lead to volatility. There are still some answers that we're waiting for here. Although most expected the Supreme Court to rule against President Trump last week, the big question mark is still refunds. What happens with all of these tariff revenues that have been collected through IEPA? So we've actually, the estimate is about north of 130 billion that's been collected through IEPA. And so does that have to be refunded somehow? That would be a pretty painful and long process. There's over 300,000 importers that have actually paid these IEPA tariffs. And so how do you track that? How do you pay it all back? This is something that the Supreme Court did not rule on. They're going to defer to the lower courts in all likelihood. But the other reason this is important is because the outlook for tariffs and where things ultimately settle is very important for the fiscal outlook and our budget. We know that with tariff revenue just skyrocketing last year, it actually helped to offset a lot of our rising costs in terms of our budget. And it actually brought our deficit down by about 2.7%. And so if you did get rid of tariffs and we did not replace IEEPA, it would have a very meaningful impact on the long term. Most estimates are that if we did not replace IEEPA tariff revenue, this would cost the government about $2 trillion in foregone revenues over the next 10 years. And so you would see our debt as a percentage of GDP continue to increase and certainly beyond the baseline projection. And so this is pretty meaningful, something that we do want to keep an eye on. At the end of the day, if you listen to Treasury Secretary Scott Bessent, he thinks that we will ultimately replace all of these tariffs over the long term beyond just this 150 days that is currently being seen through Section 122. So more to come there. As I said, this does not mean that we need to make a change at the portfolio level, but we need to just wait for more information, and we'll certainly be watching it. But if you have any questions, please don't hesitate to reach out to your financial advisor, and we'll see you next week.